All right, we are back. So every day when I get on the chart, the first thing I do, I look at the market structure, then I mark my levels, then I identify the higher time frame direction, and if there is no clear ups or downs, there's no clear direction, I don't trade. And if I do it in a very particular way. And I'm gonna cover some examples for you guys to see it. And I try to keep it simple and mechanical. But before I cover all that, I want to give you guys a little bit of a psychology talk because this week I had a realization. Even with everything that I've learned that I know over the years, I've been a little bit struggling lately. And I asked myself, why was I why why was trading and just life in general was easier when I was younger? And it hit me during my meditation. It was simple. It was fate. When I was younger, I had belief, I had no overthinking. I had almost no fear. And I just expected things to, in general, work out. And it did. But as you grow older, you start accumulating certain programming. You start accumulating and running a different program. You wake up with anxiety. You go to sleep with a little bit of a stress. And it's running in the background all day if you're not consciously aware of it. And so what happens? You don't manifest what you want. You usually manifest what you practice every single day. And most people are practicing fear every single day, practicing anxiety every single day, practicing doubt every single day. And it becomes this unconscious competence level that's running into the background. So whatever you feed gets stronger because your mind is like a magnet. And this program make the magnet stronger or weaker. And if you feed it fear, doubt, anxiety, that's what you get more of. But if you feed it faith, clarity, confidence, everything start to shift. So the next time when you get on the chart, look at the state that you're in because your mind is the real entry. It just everything start manifesting on the chart from your internal feeling. That's why it's if you've been losing a lot lately, or if you've been doubting a lot lately, that's because that's what you're running in the background all day, every day. That's why you might ask yourself, why is it that my fear, why is it that my fears manifest so quickly, but my desires and my wants either manifest or doesn't manifest at all, or it takes days or weeks to manifest. It's because if you're constantly fearful, have anxiety, have a stress, you become good at it, and that magnet becomes stronger and stronger. So next time when you're about to get into a trade, when you open your chart and you have this fear of loss, and an hour or two after a bunch of trades, or at least one or two trades, you end up losing. That's the reason why you're more afraid of losing than you are wanting to win that trade, that you are wanting to follow the process. And you can tell yourself all you want that I'm going to follow my process, I'm going to follow my process, I'm going to follow my process. But we have such an animal brain that if you have fears and anxiety running in the background, there's almost nothing you can do to overcome it unless if you practice faith and encouragement. And faith is pretty much is like the substance of things hoped for. It is the evidence of the things not seen. That's the definition of faith for me. And that's how I try to take my trades. That's how I try to live my life. So if you live your life in a certain way with faith, trust, and encouragement and positive way of thinking, then that's what will manifest on the chart for you. You start to seeing things more clearly. You start to seeing losses as a learning opportunity instead of beating yourself up about it. And you start to seeing wins as just the evidence of your fate, of your process, of your system, to whatever you want to call it. So with that being said, let's just get right into it. I have a couple of students that the main theme of the questions it's been lately is like, what is the higher time frame direction? How do you identify the higher time frame direction? For me, it's pretty simple. I just go on a daily or I go on the hourly. Doesn't really matter. What do you visually see? What do you visually see? I see the price going down. So that's it. I would mostly look for shorts. If you're always trying to decide whether you want to go long or you want to go short, your brain start to get very overwhelmed because you're constantly looking for longs, short, long, short, long, short. But if the general market is going down, and if you're just looking for shorts, it's just way easier for you to keep your decision making clean. And that way you don't get decision fatigue. Because the moment you get decision fatigue, the fears and the doubts kick in, you miss out on trades, or you just in general you take bad trades. And that's how I used to be. That's how I still am slightly. I'm still struggling with it. Of course, I'm getting better and better at it over the years, but that's how it usually works. So, for example, if you've been trading on Thursday and Friday, it's very easy. We're going down. It's simple. The higher time frame bias is down because this was the news. We tried to go back to take that the top of the news out. We couldn't. And then we start going down. We ran out of buyers. We start going down. And this is the bottom of the news data, which is a strong magnet. You kind of want to mark your levels and kind of decide where the market is going. But if you traded on Wednesday, that's when you got cooked. So the CCT strategy is very simple. I don't really need to teach it, but that's it. So you just mark your level, just like this. You mark a certain level either on the hourly or 15-minute. When it comes back down, when it closes below it, you just buy in. And I also showed in a couple of other videos show you how to utilize a stochastic indicator to kind of make it easier on you. But let's say sometimes you come to the chart and you see this, it's just straight up chop. And the way you can kind of tell it's a straight chop, you just kind of zoom in. Let's say you zoom in here. The overnight chart is kind of choppy. We're getting close to this area. We're trying to take it out, but we are not. We're trying to get close to this area, but we are not. So we're getting chopped overnight. And we went over on the overbought section, and we are going back down towards the oversell section. So this is an 8 a.m. candle. It's gonna come to the chart. You look at the 15-minute cycle. Same thing, getting a little bit choppy. And the way I do it is I just mark the top of a session and also a bottom of the session. I have to turn off something. There it is. So there it is. There is that. Okay, we're still on time. So yeah, everything is good. Yep, everything is recording. I thought that my recording stopped for a second. But yeah, I just mark my top, mark my bottom of the range in the hourly or 15-minute, doesn't really matter. And I just wait. If I take out this high, I'll look for short. If I take out this high, I look for long. And the way I do it is I just wait for the market to be open. When the market open, sometimes the pre-market gives you the opportunity. There it is. So the market open. So we finally took out that low. Then I go down to my 1 minute. Then I double check my left side, double check my right side, same thing. So now we took out. So now here's how I treat the choppiness, the range market. I have a rule. If we close significantly below this area, I'm talking about like this much, and then we start going up, that doesn't count as a chop. The chop means we grab a sweep of a liquidity from the left side, either the London session or the Asia session, doesn't really matter. And then we start getting choppy a little bit. Then I wait for a new 15-minute cycle. So we chopped around. It's at 9:56, 9:57. So I'm still waiting on the new 15-minute cycle. I'm gonna see if I get an opportunity. See, that's why we wait for the new 15-minute cycle at 10 a.m. We sweep a little bit more of the liquidity, and I'm gonna see if it start going down, then I wait for the price to come back again and then short the market. But if it start going up, then I get in at that time. So there you go. So I got a bullish candle, two consecutive one. At the same time, we inverse this tiny gap right here. So two consecutive bullish candles, we inverse the gap. It's the beginning of the 15-minute cycle, so I know the manipulation is sort of over. And we are within back in the statistic. So there's a 80 and a 20 level. When we are below the 20, we are on oversold, and we are getting back above the 20 level, and also the K line, which is the blue line, crosses over the D line, which is the orange line. That's an indicator for me that, hey, we're going back up. And where do I target? I target either halfway point or I target all the way towards the liquidity. You don't even need that much point if you trade prop firms, but yeah, that's over 200 point, which is over 700 tick. You don't even need that much. I get in here, put my stop loss around here. If I risk $500, and then I go for 1-to-1 or 1-to-3, somewhere in between here. And I'm monitoring these levels. I'm monitoring these swing highs. If you have a massive rejection of these levels and start going back the other way, I might close the trade manually. But if you close above it, then I let the trade be. So we go up. I actually took this trade. That's why I'm breaking down this trade. So we close above it, but we close back below it. So at this point, I know we are fine because I've seen these trades work out over and over again. And if it doesn't, so be it. So at this level, when we are closing above it, when we close way above it, that's when I move my stop loss to break even. And I see if the trade is going to work out or not. And I'm okay with break even. But the trade ended up working out and we were fine. But it's all about timing the market, being patient, going through your checklist. If you have a checklist, you have to practice it with backtesting. You have to read through it over and over again until it becomes very easy, until it becomes second nature. It's like your checklist should be like knowing your own name. Once you have this, you don't think about it. It's just it's in the background. It's running. It's ready for you to go. Okay, we hit this. We are at this above this level. I'm getting in. But the overall trend is just going down. And this say actually gave you more opportunities. So I was waiting for another trade on another account to see if it gonna go take out that level. It didn't do it. And instead it came down the other way. So now I'm marked two sweeps. I'll mark this area and I mark this area. So I'm gonna see which side is gonna get taken out. Because if the market is choppy for 2-3 hours, it's going to be choppy for at least another 2-3 hours. And we had the chop, so we're gonna get most likely another chop. So again, we sweep this liquidity, and I'm monitoring the market again to see if you're considerably closing way below, or we're just sweeping, chopping around, and start going out the other way. And I want to see a strong reaction, just kind of like that. It's kind of in the middle of the 15-minute cycle, but still gonna work out. So, and I don't need it to close back above it, as long as it closes somewhat above it. Yeah, right here. So I usually get in. I mean, I got in late, but you get the idea. Usually get in on the second consecutive candle. If you want to go for a one-on-one, you can kind of do something like that. Go for a quick one-on-one, and you'll be fine. Because this is another thing. This is a counter trend trade because it's counter because the higher time frame is bearish. We are selling down more than we are buying up. But if you're scalping, that's all you need. Let me go to, I took some trades on, oops. Yeah. So if you're coming down on Friday, I didn't trade on Thursday, I tried on Friday. So it's 9 a.m. candle. You see that the overall higher time frame is bearish. So I'm looking for only sales. I'm looking for the price to come down to these levels. I'm looking for price to come down either here, come back here for a short, or come back here for a short, whichever works out. I'm gonna go down to my 1 minute, and I just wait for the market, and I'm monitoring it at the same time. So we're coming back up, and within this range we also have this area. I'm sure it's also a 15-minute POI. So I'm gonna see if we may not go all the way here. We may just start going down, and that's what I was monitoring. There we go. So around here, let me go down one more. So around here I saw this. So we got the two consecutive candles going down in the middle of the 15-minute cycle. So we're still in the time frame wise very good. So I put a short here, and I target this area, target this low, target above this candle, and that's what I was targeting. And I added another contract on this one. So if I go back in here, I believe I bought one here, and I had another limit contract here. A quick tip: usually when the price breaks down, it usually goes somewhere within that. Let's say there is this nice gap. It usually goes halfway through that gap, or it goes all the way on the top of the gap. But I had another limit trade in there. So essentially with two contract. And then I was targeting this area. My stop loss was right above this other gap, called the breakaway gap, which you don't need to worry about that or know about that. I was just waiting for this trade around this area. When it start like going against me, I moved my stop loss on top of that wick, and I was monitoring the trade around here. I moved it to break even. I was like, if it goes break even, all good. And around this area, I remember I closed it manually, and I got that trade. And that's how you do it. That's how you determine your higher time frame direction. And if it's choppy, I hope that chop examples helped out. But if the higher time frame is bearish or bullish, it's very simple. Just look for shorts if it's going down, look for longs if it's going up, and just wait for the retracement. You could have taken that trade, you could have taken that trade. All three opportunities good. At the market open, slightly after market open, and then this one. Just three opportunities for you to short the market on Friday. Clean price action. Can't really ask for much, but this was probably the best one. It's over 100 point, but I missed that one. I was at work. I was taking trades on my phone. There goes that. If y'all have any question, join the community. Message me in there. There's a lot of people that passing accounts or getting payouts. If you go to the win section, we have a win section, psychology section, just general section. You can chat around, ask question. If you have any feedback or any question, you don't want to join the community, just leave them down in the comment section. If it was helpful for you, I hope the psychology part or the trade breakdowns or higher time frame explanation was helpful. If you find anything helpful, give me a like, share it with a friend. And if you need a closer help, you feel like you need somebody to hold you accountable and explain things to you one-on-one, I do have a one-on-one that I opened it up again. All the link to everything that you need is in the description, or you can just enjoy everything that I have on my channel or in the community for free. It's up to you. And with that being said, I love you guys. See you guys in the next one. Cheers. Happy trading.